Welcome to The Explainer. Today we are deconstructing a giant of the skies, GE Aerospace. We're going to go deep into their latest official earnings report to figure out what's really powering this company.
All right, so let's get right into it. We're looking at GE's Form 10Q. Now, this isn't some glossy marketing brochure, okay? This is the real deal. The official, legally required financial report card they have to file with the SEC every quarter. This is where you find out what's actually happening.
And wow, the first thing that just jumps off the page is this number, 24%. That's how much GE's total revenues surged compared to the same time last year. I mean, think about that. They went from $9.8 billion to over $12.1 billion. That is a huge leap for a company this size.
So a jump that big, it just begs the question, right? Where is all this growth coming from? Is it just one part of the business doing really well, or is the whole company just firing on all cylinders? Well, let's peel back those layers and see what we find.
Okay, so first up, let's talk about the biggest piece of this puzzle. And honestly, it's something you've probably felt yourself. We're talking about the massive, and I mean massive, global demand for commercial air travel. You know, that travel boom we've all been a part of? Well, it is directly fueling GE's jet engine business.
And you can see this isn't just a vague idea. We're talking about real physical hardware. Just look at this. In the third quarter, GE delivered 664 commercial engines. That's a huge ramp up from the 501 they shipped in the same quarter last year. It's simple, really. More planes are being built, and GE is the one providing the power.
But here's the thing, it's not just about selling brand new engines. GE has a global fleet of almost 49,000 commercial engines out there. And the more those planes are flying, the more they need maintenance, they need repairs, they need spare parts. All of that is incredibly high margin revenue for GE. So their services business is absolutely soaring too.
And this isn't a short-term blip either. This demand is locked in for the long haul. I mean, just look at this list from 2025 alone. GE has signed massive deals with some of the biggest airlines in the world. We're talking hundreds and hundreds of orders for their most advanced engines, like the GE9X and the LEAP.
So, what's the bottom line here? When you add it all up, the new engines, the spare parts, all that maintenance work, the revenue in their commercial engines and services segment just shot up by a massive 27% this quarter alone.
Okay, so that's the commercial side. But it's not just about us flying on vacation or for business. GE's defense business, the part that supplies engines for military aircraft, is also seeing a pretty major surge.
And the report is super direct about why this is happening. This quote right here, it points squarely to defense departments all over the world upgrading and expanding their air forces. You know, it's a pretty clear reflection of the current geopolitical climate, which is driving a lot of military spending.
And the numbers here, they really speak for themselves. Revenue in their defense business is up an impressive 26%. But check out the profit line. It's skyrocketed by 75%. That tells you they aren't just selling more stuff, they're operating way more profitably. That's often thanks to those long-term service contracts and really specialized high-margin work.
And all this growth, all this profit, it's also funding the future. The report makes it clear they are investing heavily in next-gen tech. We're talking about things like the CFM RISE program, which is all about creating super efficient commercial engines. And at the same time, they're developing advanced tech for sixth-generation fighter jets. Pretty cool stuff.
All right, so we've got incredible growth on both the commercial and the defense side. But what about the future? What does their pipeline look like? And maybe even more important, what are the potential bumps in the road that could slow all this momentum down?
Okay, first, let's break down a term you'll see buried deep in these reports. RPO, Remaining Performance Obligation. Sounds a little complicated, I know, but just think of it as the company's confirmed order book. It's basically all the money they're set to make from contracts they've already signed but just haven't delivered on yet. So how big is GE's order book? As of the end of September, their RPO was, wait for it, $176.2 billion. I mean, that is just a staggering, multi-year backlog of work they've already secured. It gives you a pretty clear picture of where their revenue is headed.
But even with an order book that big, a 10Q always has to give you a reality check. It's not just a highlight reel. Companies are legally required to tell you about all the potential risks that could stop them from turning that giant pile of orders into actual profit.
And you'll find this in a section called Forward-Looking Statements. Honestly, you can just think of this as the What Could Go Wrong section. It's the company's official list of all the things that could mess up their rosy projections. It's the required reality check. And GE is pretty clear about the major headwinds they're facing. You've got ongoing inflation driving up their costs, supply chain problems that just won't go away, making it harder to get parts, and of course, the big one, the risk of geopolitical instability that could affect, well, everything, their operations, their customers, you name it.
So we've dug through the incredible revenue growth, that massive order book, and also the very real risks. What does it all mean? What's the final takeaway here? Where does GE Aerospace really stand right now?
Well, at the end of the day, the bottom line looks incredibly strong. Their net income jumped from $1.7 billion to almost $2.2 billion. And for anyone watching the stock, the key metric, adjusted earnings per share, is up a massive 44% compared to last year.
So what are they going to do with all that cash? They lay out a pretty clear three-step plan. First, put it back into the business, to fuel more growth and innovation. After that, what's left goes back to the shareholders through both dividends and by buying back their own stock. And when they say buybacks, they aren't kidding around. The board has given the green light for a program to repurchase up to $15 billion of its own stock. A move that big, that usually signals that the people at the top are pretty confident about the company's future.
So, when you put it all together, this report paints a picture of a company that is just firing on all cylinders. You've got booming demand, a historic backlog of orders, but it's all happening in a really complex and uncertain world, which, it leaves us with one final crucial question. Can GE Aerospace navigate all these global headwinds and actually maintain this incredible altitude?